What if the biggest financial risk in your life isn't what you think it is? Most people believe risk comes from accidents, illnesses, or natural disasters. But in today's America, the real danger is being unprepared. Insurance is supposed to protect us. Yet millions of Americans feel confused, frustrated, and overwhelmed by rising premiums, complex policies, and shrinking coverage. So what's really happening inside the U.S. insurance system? Why are costs rising so fast? And how are current global and national events reshaping the future of insurance? Today, we're breaking it all down, simply, clearly, and honestly. Insurance is not a product you buy and forget. It's a financial agreement based on risk. At its core, insurance works on one simple idea. Many people pay small amounts so that a few can receive help when disaster strikes. You pay a premium. The insurance company pools that money with millions of others. When something goes wrong, an accident, illness, fire, or loss, the insurer steps in to cover the cost, according to your policy. Behind the scenes, complex mathematics and data modeling determine who pays what and why. This is where actuaries come in, professionals who calculate risk using statistics, trends, and probability. Insurance only works when risk is predictable, and that's where today's problems begin. Across the United States, insurance premiums are increasing fast. Auto insurance rates have climbed. Home insurance is becoming unaffordable in many regions. Health insurance continues to strain household budgets. Why? First, inflation. The cost to repair vehicles, rebuild homes, and provide medical care has skyrocketed. When claims cost more, premiums rise. Second, labor shortages. Fewer workers mean higher wages in construction, healthcare, and repair industries. And insurers absorb those costs. Third, claims frequency. More accidents, more medical procedures, and more disasters mean more payouts. Insurance companies don't raise prices because they want to. They raise prices because they must remain solvent to pay claims. When insurers fail, everyone loses. Climate change is no longer a future problem. It's a present reality. Hurricanes are stronger. Wildfires are larger and more frequent. Floods are hitting areas once considered safe. For insurers, this creates a nightmare scenario. Unpredictable, high-cost losses. In states like Florida and California, some insurance companies have stopped offering new home policies entirely. Others have sharply increased premiums or reduced coverage. When private insurers pull out, state-backed insurance programs step in, often funded indirectly by taxpayers. This raises a critical question. Should insurance be allowed to abandon high-risk areas, or should society share the cost? This debate is shaping insurance policy nationwide. Auto insurance is undergoing a quiet revolution. Traditional pricing was based on age, location, driving history, and vehicle type. Now real-time data is changing everything. Usage-based insurance programs track speed braking mileage. Time of day you drive. Safe driving can lower premiums. Risky behavior raises them. AI-powered claims systems can approve payouts faster than ever, but mistakes and disputes still occur. The question many Americans are asking: is convenience worth constant monitoring? As vehicles become more connected and autonomous, auto insurance will continue to evolve, possibly shifting responsibility from drivers to manufacturers. Health insurance remains one of the most complex and controversial issues in the United States. Medical costs rise faster than wages. Employer-sponsored plans are shrinking. Out-of-pocket expenses keep growing. Many Americans now choose high-deductible plans because monthly premiums are lower. But when illness strikes, they face thousands of dollars in upfront costs. Health insurance includes premiums, deductibles, copays, coinsurance, out-of-pocket, maximums. Understanding these terms can mean the difference between financial stability and debt. Healthcare reform continues to be debated, but no system change comes without trade-offs: higher taxes, reduced provider payments, or limited choices. Life insurance is often ignored because it forces people to confront uncomfortable realities. But its purpose is simple: to protect the people who depend on you. Term life insurance provides coverage for a set period and is affordable for most families. Whole life insurance lasts a lifetime and includes a cash value component. The biggest mistake people make? Buying too little coverage? or waiting too long. Life insurance is cheapest when you're young and healthy. Once illness strikes, coverage becomes expensive or unavailable. It's not about fear, it's about responsibility. Government decisions directly shape insurance markets. Regulations can cap premium increases, expand mandatory coverage, protect consumers, but regulations also increase insurer costs. When regulation becomes too restrictive, insurers may exit markets, reducing competition and increasing prices. Balancing consumer protection with market stability is one of the biggest challenges facing policymakers today. Insurance is not just a financial industry, it's a political one. The future of insurance will be shaped by three forces: technology, AI, automation, and data analytics; climate, increasing environmental risk demographics; aging populations and changing work patterns. Gig workers, freelancers, and remote employees require new insurance models. Traditional policies may no longer fit modern lifestyles. Insurance will become more personalized, more data-driven, and more dynamic, but also more complex. Understanding it will be essential. Insurance isn't exciting until you need it. It's the silent system holding modern society together, absorbing shocks from accidents, disasters, and uncertainty. As risks grow more complex, understanding insurance is no longer optional. It's essential. Because the biggest risk of all is not knowing how protected you really are.